Hi, this is Alan Bush with Archer Financial Services. We're going to start out with the stock index futures as usual. A lot of pressure developing today, and again, this weakness is linked to the problems in the Eurozone. Still looks like Greece could possibly exit the Euro currency soon after the June 17th elections. Also, we had Spanish debt downgraded by Egan-Jones rating agency. In addition, there earlier were reports that there could be some type of new stimulus coming from the People's Bank of China. However, there was a report overnight indicating that that will not be the case. So a lot of negative news in the stock index futures. But keep in mind that in the last week or so, stock index futures have held up relatively well. And we have seen a pattern where stock index futures were able to come back from negative news that took place in the overnight trade or early in the U.S. trade. So from here, I would expect a recovery in stock index futures from these lower levels. Don't forget that there is a very good chance now that one or more of the world's central banks will be coming in with some additional economic stimulus. So that should support stock index futures in the longer term. Over in the currencies, we have the euro currency now falling to a new 23-month low. As we mentioned, the problems continuing in the Eurozone. We have the cost of insuring Spanish debt against default increasing to a record high. A lot of analysts are looking now at 120 as an objective for the euro currency. I would not rule out 120, but I would tend to look more at a timing objective rather than at a price objective. I'm thinking this weakness that we're seeing in the euro currency will continue through this year and well into next year. So I'm focusing on a time rather than on a price. So look for additional pressure longer term that will last for many months, I would think. So stay short the euro currency. Nothing changing there in our outlook. There's a lot more to go on the downside for, I think, a greater amount of time than many analysts are thinking. Over in the credit markets, we have some new low yields on the 10-year Treasury. The 10-year Treasury now at a yield of 1.671. Once again, that is a record low yield as we move to new highs for the move in the 10-year Treasury futures and the 30-year Treasury bonds. All of this linked to what's happening in the Eurozone. I do not expect this to change anytime soon. So look for continued strength across the board in the credit markets. Once again, these are my opinions alone and not the opinions of ADMIS or Archer Daniels Midland.